right, hey guys, I just want to make a really short video from this author here um, on BOJ's intervention. Um, I thought it was a very, very interesting post, and it could be a really strong potential trade idea, um, you know, either days or weeks to come. But I just wanted to share that information because I think it is really, really interesting. And so, essentially, just going to read off what this author is saying. This is why Japan's intervention efforts won't work. The MOF via BOJ are trying to fight risk appetite and a healthy carry trade. All right, so the keyword here is risk appetite and healthy carry trade. And so that represents a vastly larger pool of wealth than Japanese authorities have in FX reserves to fight, and they are fighting rate hikes. Very interesting. So if you see this chart, right, so obviously, couple of things, right? So it has the Japan foreign exchange reserves, which are the reserves probably tied to other sort of FX currencies, USD being one of them. Um, the blue line here represents the spread between the 2-year yield of the US and Japan. And obviously the chart here is USDJPY chart, right? The actual candlestick chart. Okay. The vertical lines here, the green vertical line is actually the recent intervention of buying the yen by the BOJ. And the red and vertical lines represent the intervention by the BOJ of selling the yen. Okay. So obviously a couple of things. You can clearly see that the US Japan 2-year yield spread is, for the most part, has been pretty strong. As of recent, there has been a bit of a drop here, as of recent, but ultimately, with the current interest rates of the US, with the geopolitical tension, inflationary pressures, global scale of central banks looking to increase interest rates, we are kind of in the beginning, right? We're in the beginning of inflation pressures. Right? It's very different from the 2024 to 2025 period where inflation was kind of slowing down. Global central banks were actually cutting rates, more or less that part of the worries that we had faced and had to go through during 2022 is more or less stabilized. Now, I'm not going to predict whether inflation is going to go back to where it used to be. I think there are a lot of they're very different regimes, right? A big portion of why inflation is going up now in this particular regime is due to high energy costs, as compared to the 2022 regime where it was kind of a global inflation scale, right? We're seeing, literally consumer prices moving up, right? People had more money due to, there was this kind of after COVID, right? Post-COVID, um, year two, right? So, I mean, people still had stimulus checks, people that had better interest rates, people borrowing more money, people spending more. So it's very different, right? And we can see the effects of an increase in demand, right? What that can do to prices and why the central banks are important really in this case to really stabilize um, inflation to keep jobs stable, right? It makes a lot of sense now. But in any case, again, I'm getting off topic. But basically, what this is saying is that the BOJ currently intervening by buying the yen, right? Because obviously the yen has dropped drastically throughout the years to levels that are, the way the BOJ handles intervenes is really based on balancing the scale. So when it's you can say when it's becoming too volatile or essentially deviating too much to a certain point, then the BOJ will try to balance it out so that their trade doesn't get affected, businesses do not get affected, right? Because you can understand that Japan kind of does a lot of importing, but as well as exporting, right? Especially their Japanese cars would be one of them. Machinery, the list kind of goes on, right? So they're gonna be balancing the scales based on businesses getting affected, the people getting affected, overall country getting affected, if that makes sense, okay? So obviously that was why they were buying the yen, which we understood that. However, the regime that we're currently in is a little bit more dangerous for Japan especially in this author's opinion, which I actually do agree. The risk appetite, right? And the carry trade that we have right now is really not showing that there is a need to not borrow yen, right? Because they have still arguably one of the lowest interest rates in the world, right? Um, the US is at 3.75% interest rate. I mean, there's a clear divergence there. I think the spread's about 3%, right? So there is still a lot of demand for carry trading. There's still a large risk appetite for more yields, right? So the trend that we're facing right now is basically to these points, right? Higher US yields, strong carry trade demand, global investors seeking return, and that's what we're seeing, right? Whether the economy or there's inflation or there's weakness in the economy, it doesn't really stop investors from wanting more returns, right? All they'll do is they'll just shift to something else. Um, and that's what we're seeing. That's why we have kind of, that's why we have risk sentiment, right? That we can profit from kind of both ways, right? So that's how the market really runs at the end of the day. And so that's the regime that we're in right now, right? So investors are seeking yields, right? Because there's global macro appetite, right? Risk appetite. And the BOJ is buying the yen, but they don't really understand that that's not really going to do anything. You know what I mean? Like, because as compared to this period here, which would have been around the 2011 to I want to say 2012 period, when they sold the yen. I mean, they sold the yen because there was quite a few things that was going on, right? One was, GFC, right? 2008, the global financial crisis. There was a Eurozone debt crisis. So investors were buying yen as a way to protect the risk. There were earthquakes in Fukushima, right? After 2011. So the markets as a whole were expecting Japanese insurers and firms to essentially kind of recover things, right? Repatriate money back to Japan, which obviously added more strength to the yen. USDJPY at the time was at extreme low levels, right? It was around the 75 to 80 area, right? So historically during that period, actually the yen was pretty strong, right? And obviously having a strong yen is great for certain things like imports, right? Obviously, if you import, your yen is a little bit stronger, it's a bit cheaper to import from foreign countries. Now, however, a big part of Japan's business is also exporting, right? So like Toyota, Sony, whatever, right? It becomes less competitive now, right? Because we are basically seeing um, foreign earnings kind of converting back to lesser yen, right? Which does, kind of affect businesses, right? Especially those with lower margin type businesses, right? So that was kind of the thing, and there was also deflation pressures as well, that the yen was kind of facing. They had negative inflation rates. There was clearly down pressure, and so okay, so the BOJ decided we're selling the yen, right? So we can stop this excessive yen strength to kind of balance the scales. That's all they do. They balance the scales, right? It's not about profiting or doing better, because if that was the case, then why would they do this, right? So it's all about balancing the scales, which is just, fundamentally that's what the central banks are supposed to be, fundamentally. So um But you can see that that was a very different regime. Okay, that was a very different regime. The the macro kind of global sentiment was kind of recovering from a lot of things. But for now, it's very different, right? There's more money than we ever had before for most people, right? The rich are getting richer. Um, so that's why even times like this just doesn't stop the market from moving. This doesn't stop any risk appetite, right? Banks are making more and more money. Earnings are strong. Right now we have a whole AI semiconductor race to the moon, basically, right? I mean, that's kind of the market that we're in right now, right? The investors are just trying to find where they can get more yield, right? Be it bonds, be it stocks, whatever. Okay. So that's what this um, author is basically saying, right? That this is not going to really turn very well, and the only way to for the best bet for the BOJ is that there's a global macro collapse that triggers rapid Fed cuts, right? Which I don't know if we're getting that anytime soon, to be very honest with you. So there's a very good chance that them buying the yen isn't really going to do anything, okay? Like how it's kind of more or less done for the most part, right? I mean, if we take a look at the chart on USDJPY, I take the weekly chart here. I mean, for the most part, we've just been trending higher and higher and higher, and with current yields on the US side going up, right? I mean, I just don't see a reason for this to fall, in my opinion. So what's the game plan really, right? So the game plan is this, right? There's still strong carry trade and global risk appetite. We're in a market where there's a clear strategy to trade here between yields and the FX market. And what I really think is that eventually this is going to be a very good long. I mean, technically, if you want, you could try to long here, but technically you could. But I like to see, ideally price kind of get above the 200 MA, and then from there, I think it'll be a good gameplay personally. Because guys, I mean, just fundamentally, right? If we just look at the yield currently for the US, the spread, okay, what are we seeing? Okay, so there's clear strength here, and there's probably going to be more bids um, for USD yield, right? I could say the same for AUD as well, right? That's why this is a global risk appetite, right? We're seeing AUD's interest rates being extremely high, right? Strong yields right there. We're seeing USD as well. I guess you can see UK. We're having strong interest rates right now. That's where we're at, right? Um, so I hope that makes sense, but I think that would be a great potential trade here. Of course, ideally, I'd like to see some of the macro kind of align with that. And if we take a look at the Forex scoreboard here, um, we're kind of neutral right now because when we compare it with the yen, we're not really getting a very strong economic growth. But jobs wise, it's bullish. Inflation as well. Interest rates as or not interest rates, but inflation as a whole is showing more strength for the US dollar. As well as institutional activity, I think like I said, I think this aligned pretty perfectly with the bank intervention. That was probably a little bit more buying, but ultimately, I think this is going to change pretty quickly eventually. Um, so it just takes time for it to kind of play out. That's the reason why I would like to wait for the edge finder to at least get a 5 to 6 bullish score for me to really start to get interested. And I think we're going to get that once we take out this um, 200 moving average. Right now, we already can see that the 20 is kind of curling and breaking above the 50. So I'd like to see how it reacts at the 200 MA, right? Whether we reject, move or we continue lower. Right, but anyways, yeah. So just a little short video on well, not really that short, but a little video on what's been happening so far on the USDJPY front. All right, cheers, guys.